The US CPI is the main catalyst for the market moves on Wall Street today. The inflation data is already available, but the market has not digested it yet. For a start, let's discuss the results of yesterday's New York session. US stocks showed modest dynamics but managed to close at new highs of the year. The Dow Jones was the best performer on Monday with a gain of 0.43%, and the S&P 500 closed 0.39% up at 4,622 points. The benchmark stock indexes traded mainly higher in the New York pre-market, though with the modest moves. The US CPI triggered a market boost for a short while and caused some confusion among investors. So, futures on the stock indexes added 0.1 and 0.2%. Amid current fundamentals, the S&P is expected to trade in the intraday CAD between 4,600 and 4,640 points. If the bulls manage to overcome resistance, higher targets will be 4,670 and 4,700. Alternatively, the index could decline to 4,580 points. Wall Street had no excuse to growth on a Monday because of the economic calendar. The major stock indexes gained ground to meet market expectations for a soft landing in the US economy and the likelihood of a rate cut by the US Fed next year. Such expectations triggered a rally of US stocks in recent weeks. As a result, each of the three stock indexes reached its own highest closing levels of the year. As for corporate news, the semiconductor stocks logged the strongest gains of 3.4%. Separately, Broadcom shares spiked by 8.99% as Citigroup upgraded the stock's rating to buy. For the same reason, Nike shares rose by 2.33%. Futures on the US stock indexes went up on Tuesday because investors were anticipating the crucial inflation report to find clues to the Fed's decision on the interest rates that will be unveiled tomorrow. And today, the US Central Bank is opening its two-day policy meeting, so the CPI for November was released exactly on the eve of the policy decision. At the first glance, the inflation report does not deal a blow to optimism about risky assets, though the data was a bit stronger than expected. Following a flat monthly reading in October, consumer prices in the United States inched up by 0.1% in November, surpassing the consensus of another flat score. At the same time, the annual rate slipped to 3.1% from 3.2% in October, in line with the expectations. Energy prices tumbled by 5.4%. Gasoline prices plunged by 8.9%. On the other hand, medical goods and transport services went up. The core CPI, excluding volatile prices, grew by 0.3% in November from a month ago, and the reading matches expectations. The CPI in October was 0.2%, and the core CPI in the annual terms remained at 4%, also in line with the expectations. Despite an uptick of inflation on months, the overall downtrend remains valid. Inflationary pressure has been easing in the United States, and this suggests the conclusion aggressive monetary tightening by the Federal Reserve has been mirrored in the US economy. Markets have downgraded inflation expectations. Deliveries are now managed according to planning terms. Oil prices have been following a steady downtrend. Curiously, the market is not overwhelmed by euphoria, though economic data has provided alarming signals for 2 weeks straight, slightly defying the consensus. Traders may join one of the opposite camps, betting on the hawkish and dovish Federal Reserve. Anyway, despite higher volatility today, the storm on Wall Street is anticipated tomorrow. And the regulator might dampen the optimism of the futures market about monetary easing. In the corporate news, Google parent company Alphabet is under pressure today after Fortnite maker Epic Games won a high-profile antitrust lawsuit against the company. Unlike the muted response on Wall Street, the currency market gave a strong reaction to the consumer price index, and the US dollar index went sharply down following the report. The index opened the New York trade at 103.90 points. The instrument is likely to trade in the intraday corridor between 103.90 and 104.20 points. The optimistic scenario suggests a rise to 104.50, and the pessimistic one a decline to 103.70 and lower to 103.50 points. Today, the US dollar lost its footing, but the yen partly recovered its losses of the last 2 days. Markets rely on considerable rate cuts by major central banks next year, and the Fed Watch tool indicates a 50% chance of the first rate cut by the Federal Reserve in March. However, policymakers of the US Fed, the Bank of England, and the European Central Bank make public remarks to moderate optimism. All in all, currency traders are anticipating economic data, policy decisions of central banks, and a high volatility in the coming days. What about Canadian dollar? It's on the defensive on the back of another slide in oil prices by more than 1%. At the same time, the intraday weakness of the greenback enabled the Canadian dollar to rebound. And the currency pair USD CAD opened the New York session today at 1.3578. The intraday corridor is defined between 1.3540 and 1.3620. If the price leaves any of the borders, the Canadian dollar could either strengthen to 1.3490 or weaken to 1.3650. The crypto market is licking its wounds after the lost battle with the bears. Following a fall to $40,000 yesterday, Bitcoin is making brave efforts to gain ground. Traders are trying to puzzle out what actually happened, fixing profits or a downward correction which could repeat in the short term. Anyway, Bitcoin managed to recoup some losses and opened the New York session at $41,940. Popular altcoins are also trading mainly in the green. The baseline intraday scenario for Bitcoin is the area between 41,400 and 42,400 dollars, and the peers could push the price to 41,100 and 40,600 and 39,800, and if the buyers accept these trends, the token could rebound to 43,200 and 43,980 dollars. Our review is over. Ask any questions in your comments. Our analysts are always open for feedback. Keep close tabs on the financial markets on the InstaForex TV channel and see you online tomorrow.